Hello everyone, and welcome to the Walkabout Resources Investor Webcast. I'm Mike Elliott, the company's non-executive chairman, and I'm joined today by our CEO, Andrew Cunningham, who's just returned to Africa after spending a week and a half in Perth. It is disappointing for all existing shareholders that we are having to raise more equity to complete the construction of Lindy Jumbo. Like most of you, I expected last year's equity raise to be the end of our proprietorial obligation. However, as has been well canvassed, the inability to date of Lindy Jumbo to draw on its loan from CRDB has necessitated that we, as owners, step up yet once again. It is all the more frustrating, as Andrew will explain, that the development of the Lindy Jumbo mine has been progressing so safely and well, with very few concerns arising. This is a testament to the quality of our contractors and the work they have performed to date. On that note, I would like to acknowledge all our contractors by whose generous support has enabled Lindy Jumbo construction to continue uninterrupted. The proposed equity raise gives our contractors confidence that we will have the funds to pay for the past work that has been performed but unpaid, as we've outlined, totaling some $8.1 million US. The company continues to work with CRDB and other parallel funding sources to provide the necessary project completion funds. We hope that to be the case, but we're also planning for that if it does not happen. The maximum equity raise under this prospectus remains the safety net if those sources don't eventuate within the announced timetable. Even if the maximum is required under the equity raise, the company will continue to pursue debt funding for Lindy Jumbo, as it is an outstanding project economics that supports debt as the most efficient capital structure. This is borne out by the recent independent valuation performed by EY that indicated for debt purposes, Lindy Jumbo had an in-use value of many times the proposed debt amount. Lindy Jumbo has been significantly de-risked, with only approximately $11 million US to be incurred to complete construction, which is expected in the first quarter of next year, all going well. Most of this amount is to be incurred under fixed price or fixed rate contracts, which have served us very well during these inflationary times. The directors intend to take up their rights or participate in any shortfall. That will represent about 5 to 6% of the proposed issue if we raise the maximum. We encourage all shareholders to do likewise. The format of this session is that Andrew will go through parts of the presentation deck that was lodged with the ASX today. Many of you, being existing shareholders, will be familiar with some of the items in there, which is also there for obviously potentially new shareholders. In the remaining part of this hour-long session, we'll seek to answer as many questions as possible. In any event, I will undertake to respond to all shareholder questions not addressed in this forum today if you've left appropriate contact details. Andrew?
Good morning or good afternoon to some, and thank you for joining this webcast. I'm just going to skip through the first couple of pages. This, as Mike said, the presentation is lodged on the ASX. If you can just read through the disclaimers there, please, on page 2 and 3. And I'll go directly to the executive summary, which is just an overview of what the project's about, if there's new shareholders, what we've been doing, and what the plan is going forward. First of all, today, I'll spend most of the time talking about the Lindy Jumbo Graphite project, because that's the one where our main focus is. But as you know, our head office is in Australia, with projects in Tanzania and the UK. We think, obviously, that the Lindy Jumbo is an excellent, outstanding investment opportunity. It's the highest margin and one of 2 graphite projects currently under construction in the world. It's a long-life project of compelling economics and forecasted to have an average annual EBITDA of 64 million Australian dollars or $44 million US over the life of mine, with a very short payback period of less than 2 years. It's in construction. All the permits and approvals are in place, the contracts are in place, and our transition to producer status, and in the first instance, delivery of nameplate capacity over the next 12 months opens up capacity and the potential to maximize market opportunities. There's, as Mike said, we well progressed on site. We're over 60% complete of the groundworks and the civils, with the plant currently being constructed, and it's an outstanding low capex growth, but there are outstanding low capex growth opportunities going within the mining area, but also elsewhere, downstream, for instance, that we will look at, but I'll explain that more in detail further on in the presentation. First of all, the graphite markets, they've been very robust over the past 2 years or longer than that. There's been a 30% increase in graphite prices over the last 12 months alone, and that's mainly driven by the EV market and the battery storage or the energy storage component. The 30% increase in prices was also mainly on the fine flakes, as you can see on the graph there, over the last 12 months, and currently the sales price for fine flake graphite is around about $800 a ton. There's also, just recently or yesterday come out, is that over the next 15 or 12 years, there will be a shortfall of 6 million tons of graphite that just isn't on the market. That means almost 100 new mines need to come online, producing 56,000 tons per annum each. And as I just said in the beginning of the presentation, we are one of 2 graphite mines currently under construction globally. All indications are that this deficit is already there this year. There's various numbers out there, but there's a forecast that this year is almost 85,000 tons deficit already in the graphite market. And it's mainly driven by the EV and the battery storage unit. But that said, is that the larger flake, which is obviously our focused area, is also forecasted to grow about 6% over the next 20 years or so, or 6% per annum. Corporate overview, you've obviously seen this. The top 40 shareholders hold about 50% of the company. We've got a very experienced board and management, and very importantly, with a lot of experience in operating in Africa. It is vastly different operating in Africa than it is in Australia. So let's just quickly talk about the equity raising. It's a 2-for-3 offer to existing shareholders. Existing shareholders can oversubscribe as much as they want to. The directors, as Mike said, have committed to take up between 5 and 6% via the rights issue or the shortfall. And the issue price is at a 48% discount to the closing price at 30 May when we went into suspension. And obviously everybody's aware of why we went into suspension is due to the delay in the drawdown from CIDB and the debt. It's at a 36% discount to the TERP, which is at 17.3%. And if you obviously more details that you want to read on this is in the prospectus that was lodged over the last few days. This graph just shows the issue price of 11 cents. The company hasn't traded beneath 11 cents over the last 2 years. The TERP there at 17.3% is indicated there. And through the rights issue of 33 million, this is enough funds to complete the construction of the project in Tanzania. And as Mike has explained, we can pull back on the rights issue should any of these other funding opportunities or the debt drawdown through CIDB be completed during the rights issue. So the use of funds, the slide just quickly just explains should we only go with the minimum, what we can do, pay back the creditors, work on all our alternative funding opportunities or that we are currently working on in parallel with the CIDB debt funding. And if we go to the maximum of 33 million, that's obviously completion of the project into completion of the construction of the project into commissioning and ramp up. To date, we're sticking fairly well to our timeline. The rights issue closes on the 20th, next Tuesday on the 20th September. And last day that we can extend the rights issues is at the end of next week on Friday the 16th. We can go through the pro forma balance sheet. What did it look like after the raising? All this is obviously available on the website, and you can read it at your own time. So let's talk about the Lindy Jumbo Graphite Mine and what's happening on site. We see the Lindy Jumbo Graphite Mine as very different to the rest, and it's based mainly on 4 factors. The one is the resource. It's an exceptional ore body. It's high-grade, large flake. It's from surface. It's boringly predictable in its nature. That what I'm trying to say through that is that when you drill along strike or down dip, you do get what you expect to get. We've only drilled out into the measured and indicated categories a very small portion of the deposit. There's a lot of upside opportunity within the resource. We're certainly not resource bound, and I'll speak about that. The mining is very simple. It's from surface. It's a small mining fleet, and it's low operating cost. We're testing this, or we have tested this through the starter pit that we've currently opened up, and it fits in very well with the geological model or the block model that we had. The graphite is very easy to distinguish between the graphite and the non-graphite ore, and we're building a healthy stockpile on site, which I'll chat about later. The next differentiating factor is the processing. Due to the high-grade nature of this ore body, it liberates the graphite fairly easy. It helps that you don't need so many stages of flotation or attritioning between the flotation stages, 5 or 6 stages of flotation, and the grade is up to 95% total graphite carbon, which means the high-grade nature of this ore body means a very small plant that's currently under construction. It's a manageable plant. It is remote Africa. It's much easier to operate if something goes wrong, to troubleshoot it. And it's a small amount of ore that goes to the plant. Less than 700 tons per day is needed to feed this plant to nameplate capacity of 40,000 tons per annum, and which means that the capex to build the plant is also very low in comparison to our peer group. The other differentiating factor is the premium flaking concentrate. This project and the ore in the ground is highly skewed towards the larger flake, which means higher sales price and highest buyer basket price for the graphite that we put on the market. It's an outstanding product mix. About a quarter of our product will be ready for the battery market or the smaller flake graphite market, with 75% of our flakes going into the more speciality and niche users of graphite out there. And one other differentiating factor, which I don't have on here, is that we're in construction. One of 2 mines in the world in construction. I believe is that we 1, 2, or 3 years ahead of our closest peers in the market should they get their funding sorted out today. The construction on site is well advanced. There's a couple of photos there showing the tailings facility and the various infrastructure going on site. These photos are already outdated. As Mike said, our contractors continue to build the plant, continue to work on the civils on site, and this is still, until we ran into the difficulties with the bank, there were no cost overruns in building it. It's fixed price contracts, and the increase in the capex has been incorporated into the capital raise already. There's increases because of the delay in the project, but nothing substantial, and all of this has been taken care of. The front end of the plant is complete, with the crushers currently being installed. The concentrator building is in progress. The TSF is going well. All the liners for the TSF and the piping on site, and the mining is in progress. We needed waste rock to build the TSF dam walls. You can see on the top left-hand corner there's one of the dam walls already in construction, but also through the opening up of the starter pit, which is deliberately put outside of the high-grade ore zone. We did open up one of the ore zones that we were aware of, and that's currently being stockpiled. There's around about 9,000 tons in stockpile, which we estimate about 1,600 tons of contained graphite. That equates to around about 2 million tons or $2 million worth of graphite sitting on a stockpile ready for commissioning of the plant as soon as construction is complete. the other thing that has happened while construction was in place was the installation of the grid power through TANESCO, the state-owned power facility in Tanzania. They have already installed the 33 kVA line, which is enough for the construction and the peripherals needed during the construction phase. But they've also committed to install a 4.5 megawatt line, which is more than enough to run this entire plant and entire operation. Now, why is that significant? Power makes up around about 26% of our operating costs. We are the lowest quartile producer, or probably the lowest, predictably the lowest producer, lowest OPEC producer in the world. Currently under construction as well, and the grid power is obviously a game changer there. It is at a fraction of the cost of diesel power. This will further lower our operating costs with the prices of diesel as they are. This is a very good or very welcome addition to the project as is. The power line is currently around about 3 kilometers from site, with the equipment being delivered there by TANESCO, and that construction will be complete over the next few months. The remainder of the equipment, about 65% of all the mechanical equipment, has been delivered to site through around about, I think there's 11 shipments that have reached Tanzania, and all the equipment delivered to site. 77% of the cost of the EPC contract has already been incurred, and the remainder of the equipment, as you can see in the pictures below, have been constructed and manufactured and are in storage in China, ready for shipment as soon as the funding is complete. When we have line of sight to the end of the funding exercise, we will give them the go-ahead that they can start loading this equipment or organizing for the equipment to go into ships and be shipped to Tanzania. Obviously, shipping is something that people are well aware of, and the issues all over the world in relation to shipping. That has improved over the past few months. There was a huge congestion at the port of Dar es Salaam to various construction activities there. That has improved quite significantly. Our logistics contractors in country are now well versed about how to get the equipment in and to site, and all our VAT deferments and so forth through the government of Tanzania are in place. So it is a relative simple exercise now, getting the ship or getting the containers and the equipment into port and down to site. The majority of the equipment that hasn't been manufactured or ordered are off-the-shelf things like the electrical components and the instrumentation and the generator sets and so forth. And these orders will be placed for these as soon as the funding is in place, with the shipments then to reach Tanzania before the end of the year. Just the schedule. Obviously, this has moved on a bit since we ran into the funding or the debt funding issues with the local bank. Construction, all earthworks and so forth, are planned for completion by the very early in next year. The mechanical installation of the plant, as you saw in the photos, is going well. That is also due for completion in the first quarter of next year. Then thereafter, dry and wet commissioning can commence, with the first concentrate in the first half of next year. So it is in a very aggressive timetable. It is something that we've known from the start, is that we'll have to pull out all the stops to stick to this timetable, but thus far it's been going very well until a bit of a slowdown after the debt issues. The photograph there you can see, which is now outdated already, that's about 2 months old, with the equipment already stacked on site, flotation cells, filter presses and so forth, and with the civils progressing very well on site and about 80% complete at the moment. Another thing that we put in place, we've always said about 6 months from production, we'll finalize our offtake agreements. We've recently signed a 100% sales and marketing agreement with Wogan Pacific. Wogan has been working together with us over the past 3 or so years. They're very familiar with the Lindi Jumbo project and our product. You can see a photograph there of some of the marketing material and that is in China, that has been going to various customers. And it is a very good fit between Wogan and Walkabout or Lindi Jumbo. Important is that we get paid 80% of the perceived value of the loading of consignments at the port in Tanzania. This obviously lowers our risk of waiting for customers to pay for the product, and which means there's a working capital facility of up to $3.2 million currently, but this can be increased to $8 million if necessary. We still have our existing offtake agreements in place with the two Chinese customers that we've announced to the market. Wogan will and our agents in China will be progressing these. They are very happy with the agreement and happy to continue as is with the agreement through Wogan. And then that Wogan's also identified various other customers, preferred customers that we would like to deal with. Wogan is well known all over the world. This is what they do: specialty material shipping and sales of this into China and elsewhere in the world. They are very well set up in China. We're dealing through the Hong Kong office, but there's also been quite a few inquiries from outside of China, people that are looking to diversify their supply because of the obvious issues between many of the Western countries and China, and they are looking to get responsibly sourced graphite from other parts of the world. And Wogan is also dealing with us with those customers. So a question we often get asked is, we've always entered the market, or said we're going to enter the market with a relatively conservative number of 40,000 tons per annum. People want to know, how big can we go? As I said previously, we are not resource constrained. The resource at the mine is open along strike and down dip. And we've got an exploration target in the near vicinity of the mine, and a 20-kilometer radius thereof, where we hold about 170 square kilometers of exploration area. And we've also now got another project in the north of the country. So our exploration target is a minimum of 72 million tons and a maximum of 170 million tons. Now, our target is and will always be high grade. That obviously makes a big difference to the economics of any project. And these targets that we've got out here are coincidental with known conductors and known occurrences of high-grade large flake graphite over these areas. What are the growth opportunities? The plant as is has a 23% excess capacity in it. Without expending further capital, we can produce up to 50,000 tons per annum, should there be a demand for it. And those numbers, the extra 10,000 tons of graphite, has not been incorporated into the DFS or into the financial model. Once the plant is running in steady state, this will obviously be our first point that we'll be looking at. If there's a demand for more, and we do see that demand at the moment, we can produce up to 50,000 tons. With the further enhancement of the existing equipment on site, and that's, I mean, it's not the big equipment like the mills or the flotation cells. It's things like pumps and some of the motors, which is low capex. Studies show that we can produce up to 60,000 tons per annum in the current setup of the plant, without any bottlenecks at the back end, for instance. There's also conversion of the current JORC resources into higher confidence categories of measured and indicated, which means you can then convert it into the reserve. It's just a matter of drilling out a closer space drilling. As I said, the resource is very predictable, down dip and along strike, which is open from surface, and it's just a matter of drilling these out and adding that to the resources. Should we obviously increase our capacity or our throughput through the plant, that will lower the life of mine at the current rate, or at a higher rate through the plant, but there is enough graphite within the current resource boundaries to keep us, I believe, going for another 24 years. There's also a lot of near mine within the mining license. There's a lot of known graphite occurrences, known high-grade graphite occurrences that need to be drilled out, up to 30 million tons that we believe is sitting untested. Some of it has been tested. It is there. These are real opportunities that have been exposed at surface, and within a radius of 20 kilometers from the mine, there's up to another 70 million tons of graphite available for feed through the plant. I must say that we haven't tested the entire license areas. These are based on relatively small portions of the license, where we do have coverage with geophysics. So there's certainly no shortage of graphite in the direct vicinity of the Lindy Jumbo Graphite Mine. We've also got the Kimoingan project in the north of the country, and there's a target of between 20 and 70 million tons. That's also in a well-known graphite area up near the town of Arusha. We also will have low-grade stockpiles on site running between 6 and 10% total graphite carbon. As I haven't mentioned it, but it's these grades of our low-grade stockpile are higher than some of our peer group in the vicinity's reserve grades. Now, what do we do with that? Do we blend it in, or do we start a separate stream? Those are opportunities and exciting opportunities that we can look at once we're in steady state operations. There's also the downstream opportunities. A lot of our peer group have focused their attention on the downstream opportunities. We have remained focused on the upstream part, the mine, building the mine, getting it run profitably because of the compelling economics of this project. We have done a scoping study on an expandable graphite plant. Those numbers are available to us, and we are speaking to various parties elsewhere in the world of opportunities in this space. We don't want to divert our attention at the moment. We don't want to go too far down that path, but it certainly is something that we'll pay more attention to once the mine is up and running. The project infrastructure is very good. We're 200 kilometers from the port of Mtwara. The last 60 kilometers of that is currently being quite a big highway being put in there, tarmac highway that's under construction and is earmarked for completion by the end of this year, probably by mid next year is my prediction. And then it's 460 kilometers to the port of Dar es Salaam. So we have two options where we can export our graphite from. The southern region of Tanzania is a huge amount of attention is going in there into improving the infrastructure. The changes at the town of Rwangwa, where we operate from, have been tremendous over the past 5 years. Schools and hospitals, hotels and things going up. And then the Mtwara Development Corridor is something that the government is paying a lot of attention on. There's recently been announced investment of $30 billion into the gas field development near Mtwara and Lindi. There's talk of putting in a T junction on the existing gas pipeline that runs between Mtwara and Dar es Salaam, and putting in a T junction to the town of Rwangwa with gas-fired power stations. The bulk of our grid power comes from gas-fired power stations in the southern part of the country there, and there's ample spinning reserve, and therefore the 4.5 megawatt grid power that's currently under construction to site. The resource, I've spoken quite a bit about this. The reserve is based on 37% of the measured and indicated resource only. That's that red and yellow-green area on the model that you can see there. That's where we're currently opening up the starter pit, is on the top end of that, the north eastern corner of that indicated area there. And there's a photo at the bottom of the open pit taken about a month ago. You can see the stockpile of about 9,000 tons of graphite containing ore, and we estimate around 1,600 tons of contained graphite within that. The grade is spectacular. I've recently sent a sample from exploration trenches, a 3-ton sample to Beijing, where they've treated it through a pilot plant using our flow sheet. And the grade of that sample was 40% total graphite carbon. Now that's randomly chosen rocks from 3 trenches in the vicinity of that open pit that you can see there. So the grade at this deposit is just exceptional and very different to the rest. It's the highest reserve grade of any undeveloped project in Africa that we know of. The DFS, we've spoken about this. We spoke the margins. It was always our intention to chase margins and not chase the NPV when we did this study. Let's get into production and then we can grow into the market as we know it. Healthy margins on our sales of forecasted on our sales of graphite, NPV of $200 million and the post-tax IRR of 119%, which means the operating costs are very low. DFS states around about $350 per ton FOB at the port, and a long life of mine, 24 years, and this is very conservative, as I've said a couple of times during the presentation. Obviously, very important to us is the way how we operate in country. We are a well-known citizen. We're very well supported by the government in country. The government is aware of all our funding, the status of our funding. They've been very supportive and helpful, doing what they can to get us over the line with the local banks. But also, they know how we operate on site. We've had memorandums of understanding in place with the local villages since we started operating there about 7 years ago. Our philosophy has always been to recruit locally. If we can't get the skills local, we look wider. If we can't get it in the country, only then will we bring in people from outside. Tanzania has got a good workforce of very experienced people in the mining industry and a good workforce to go and look for people. Environmentally, we've been doing the right thing from the start. Environmental audits have been showing that has been done on site. But obviously, our focus, it's a very poor area of Tanzania, has been on the social side of things. We have supported various projects in the vicinity, schools, clinics, police force, sporting teams, and also recently where we've supported the Ministry of Health by our COVID vaccination program that's been rolled out, and we've announced that to the market a couple of times. Photo there on the left is of the Prime Minister when he visited site. We have quite a few visitors from high levels of government that are very interested in the project. And the Minister, or the Prime Minister himself, has said is the way that we've been operating is that the way he wants to see other mining companies operating in country. Our intentions of giving the local villages 5% ownership, or not giving them, it's earning from them, it's not a free carried interest. But the way we've set that up is through a local trust that will be managed by ourselves and the district commissioner and also members of the village councils themselves. Has won us an award at the recent AMEC, or last year's AMEC awards in Perth for the way that we propose doing that. So just to recap, why Walkabout? It provides a tangible exposure to graphite. As I said, 100 new mines need to open up over the next 12 years, of which we're one of 2 currently under construction. It's one of the most critical battery minerals out there, and that's been acknowledged by the industry. It's the highest margin graphite project in development globally. And it's well into construction, well advanced, and it's been de-risked. With the most critical parts of the project or the most risky parts of the project, in our opinion, have now been taken care of. And as Mike said, only $11 million still needs to be incurred to get the project construction to completion. We've got 100% sales agreement is in place. There's compelling economics of a long life mine with a short payback period. $44 million average EBITDA. And we've been doing the right thing in country with a very good ESG credentials, and that is what people are looking for: responsibly sourced graphite from sources outside of China. The rights issue to fund construction completion is in place, and that's what we're speaking about now. And the offer price of 11 cents is at a discount of 49% to the last closing price in May. And I think that's all in the presentation. As a number, there's a number of slides in the appendix which you can go through on your own, and I think we'll end it there and be ready for questions.
Great. Thanks very much, Andrew. So we've got a couple of questions that have come through. Thanks everybody for sending those through this site. We'll get to as many as we can, but as I noted up front, if we don't get to you, if you put your contact details, I'll be in touch with you afterwards. So the first one, which while we've got that slide up, kind of answers. The question was from Jeff about what is the capital cost and the internal rate of return. I think on that slide we just had showed that the current capital cost through the current build program is about $34 million US, of which we've got 11 to incur. So we're more than 2/3 through that capital cost, and the internal rate of return on an after-tax basis, as you can see up there on the slide, at 10% is 119%, which is absolutely outstanding. And if I might just add to that, is one of the reasons why we emphasise very much it's around the potential for growth of Lindy Jumbo, because while downstream opportunities may be attractive, it'll be what they may do to pull more graphite through Lindy Jumbo that'll give us our maximum return. So we can still get good returns from downstream activities, but they're not going to be as high as 119%. But any additional tonnes we're able to put through Lindy Jumbo through growing the market will increase that rate well above 119%. There was another question from, from Sanjeev. So Andrew, when is the production plan to be started realistically?
With dry and wet commissioning in the end of the first quarter next year, first product will be available within the first half. Then there's obviously a ramp-up period to nameplate capacity, which will be in the second half of next year. But first production is scheduled for the first half of next year.
Yep. There's a question here from Alan. How have the alternative funding avenues progressed? You might want to start with that, Andrew, and I'll finish with that.
Obviously, other than the debt funding through the bank, which we've offered various scenarios to the bank, which they currently mulling over and will get back to us on in due course, hopefully. There are another of parallel opportunities out there that we've been looking at. Obviously, I can't say too much about it, but it's things that we are progressing as aggressively as we can, trying to get them over line while the rights issue is open. And as I said, we have the right to pull back on the rights issue and not take the full complement if one of these alternative funding opportunities come through. I don't know if we can say anything more about it, Mike.
No, look, I don't think so. I think obviously we need to get them to a particular stage before the board would have confidence that we step back from the rights issue. They are progressing. They need to move, beyond sort of term sheet stage to get to a position that we can be confident that we can either step back or delay any further equity raise. But it gives us a good opportunity to have a deadline in there that focuses the mind to try and bring any one of these to their conclusion. So it's working in our favour to do that, but the next couple of weeks will obviously be critical on that front. Okay. The next one that we've got there, Andrew, is can we bring Lindy to production if we raise the minimum $16.5 million? This is from Mr. Young or Ms. Young. Can we bring Lindy to production if we raise the minimum $16.5 million? Is the $10 million loan disbursement confirmed? What is the contingency plan if we don't hit the minimum amount in this rights issue?
The minimum will be enough to pay the creditors. It will give us. We'll prefer to only go with the minimum once we have clarity on or either from the bank or from our parallel funding opportunities that Mike has just been speaking about, where we can pull it back to the minimum. We also have 3 months to place the shortfall should we only get to the minimum. That will give us enough runway that we can pursue these other opportunities further. But it's certainly the minimum won't get construction complete. But it does buy us a lot of time to complete any of the other opportunities should they be in a stage that we have confidence that they will be successful. The 10 million drawdown from the bank, 10 million gives you 10 million of debt. We don't see much value in that at the moment. A 1-for-1 doesn't make much sense. We'd rather spend that on the project itself should we need to go down that route.
Yeah, I might just clarify that with the bank, we have made a submission to the bank quite some time ago now as to providing direct collateral. So instead of, and there's a couple of questions in here around the standby letter of credit, and essentially what we've now offered is the bank to have direct collateral, because if we're having to provide collateral to a standby letter of credit provider, we may as well provide it directly to the bank. So we have approached the bank about providing direct collateral, made a suggestion on that front. That's what's currently under review by the bank as to how much direct collateral they may need, in addition to holding full project security over the asset. And as I indicated in my introductory remarks, the value of that asset's been independently valued at many times over the debt amount. So looking for additional collateral, how much is extra is required for how long, is currently with the bank, and we obviously, like all shareholders, eagerly await a reply from the bank as to what might be necessary to unlock that full drawdown. The amount that we have sitting in the prospectus there of $10 million is a theoretical amount based on, previously what they've said they may need to have as collateral to unlock parts of the debt. So we're looking for the full amount of debt to be able to be released, and so need clarification as to how much collateral. And this raise could very well be, that's one of the scenarios we contemplate here, provide that collateral for at least a temporary period of time to enable that drawdown. Which I think answers a question that Philip had as well, which is, why is 16 million needed to finish? Why, when 30 million, why is it being sought? Well, essentially, we need 20 million US to both pay the existing creditors and to fund the 11 million that still needs to be incurred. The 16 million in minimum in there is one of the alternatives in terms of providing collateral to CRDB or to be in conjunction, potentially with in one of our other parallel funding paths. There's another question from Phil in here about how does this affect our dealings with Battery Metals Capital Group. We've been working collaboratively with Battery Metals, and they are supporting this equity raise. So they are both a shareholder and also a creditor of the company. So they've been supportive around their status on both, and they've indicated to us an intention to take up at least some of their rights under this offer. Andrew, here's a fairly broad one. This is also from Mr. or Miss Young. It's at the current market price, is Lindy profitable?
Yeah, this project can withstand severe downturns in the market. With margins of around $1,000 per ton on our basket price, a severe downturn in the market with low operating costs. The DFS indicates around about $350 per ton at the port of Mtwara. If that increases due to the increases in costs as we currently see, it still has the ability to produce graphite profitably. If there's a severe downturn in the graphite prices, with the lowest operating costs in the industry, or forecast as low as operating costs as we have, it's going to take quite a lot for this project not to be profitable. At current prices of the graphite, yes, it is very profitable. And as I said, something severe must happen for the mine not to be running profitably. These have also been stress tested by various parties in the industry. As Mike said, EY has recently completed a valuation on it, where they've done various cases of stress testing using downturns in the graphite market, increases in operating costs, and that has also been independently verified through SRK, who did a technical due diligence study on the project, and obviously stress tested various scenarios and added them all together. What if there's an increase in cost and a downturn in the market? What happens to the graphite or to the project then? Obviously, your margins come down, but you can still survive and survive well. Thanks, Andrew. Another question, this one from Jan.
as a large shareholder, and I guess as a large shareholder, that'd be through their free carried interest, is the government of Tanzania able to do anything to help with the debt drawdown?
As I said, the government has been very supportive of us. They've been very involved with us and our conversations with the bank. Obviously, the government cannot be too involved with the bank. The bank is not a state-owned enterprise, but the government has given the support to the company by explaining the economics, the importance of this project, and so forth. They've joined me. High-level people of the government have joined me in meetings of the bank to support us and to quell any of the fears that the bank might have had during these conversations. So yes, they're doing what they can, but they can obviously not force any banks to do anything, and it's certainly not something that government should be doing.
Okay, thanks, Andrew. You mentioned, and this one's from Charles, you mentioned electrical instrumentation as being off the shelf. What about switchgear and transformers?
Switchgears and transformers are also equipment that we've been looking at with the grid power that's been delivered to site. That's obviously something that we needed to take into consideration. We've got various quotes from various parties within Tanzania and also outside of Tanzania for the necessary transformers for that. We know what the lead times are on that. We know when to order that, and the same goes in China with the necessary switchgear that will be coming through our EPC contractor.
Okay. A question here from Mr. or Ms. Young. What is the total debt currently on the balance sheet? I guess we'll be putting out our financials by the end of the month, but essentially the only debt that we have currently on our books would be, and I'm taking the broadest definition of debt, that would be amounts that we owe to our contractors. It would be the prepaid arrangement that we have with BMCG, which is about $2.9 million US for unissued shares. And while it's post-balance date, as we announced in the last couple of weeks, there was about $1 million of non-recourse debt that we received from a group of shareholders to tide things over, which will be in the main subject to being completed by the issue of shares under this offer. So very much we don't have any formal debt. We have more of those informal debts. The next one we have is from this is from Sanjeev. When will you come to know before 20th September the other capital funding source? Walkabout is exploring so that we could get enough time to decide if we need to arrange funding by buying additional entitled shares. Look, I think that the way that it's set out in the prospectus as to the order in which we will allocate is obviously to shareholders first under their rights. Secondly, if we need to go to shortfall placement, then there'll be a priority to shareholders that take additional shares. And then beyond that, then it goes to broader placement of shares. It'll be a director's decision at that time as to how much we need to place, depending on how those other alternatives are. So yeah, my advice would be, if you want to get up those priorities, it would be to put your applications in early. There's a question here from Rob. It's about prepaid offtakes. It says prepaid offtakes aren't an option to support the cash collateral required. As we've mentioned in the prospectus or in the announcement that predated the prospectus, it is one of the parallel funding paths that we're currently going through, is discussions with potential offtake parties who would basically prepay and put some of that cash up front. Clearly, they would want discounts, so that's a balance that we have to weigh up against our other funding alternatives. Another question from Rob Wogan, and whether they're an option to support any funding, Andrew?
Look, it is, as I said, there is a working capital facility available through Wogan upon loading of the first ships. Whether or not they would like to participate in a pre-fundment before that, those are discussions that we have had with them. But I can't say too much about any of these discussions that we're currently having.
Yeah, I think most of those, as you could appreciate, would be commercially confidential. A question from Jerry about when's the ASX suspension going to be lifted. That makes a statement further beyond that. Look, we were in a voluntary suspension, and the nature of the suspension was really about the uncertainty we had about the CRDB debt drawdown. So we either will resolve that through CRDB or replacement debt drawdown occurring, or in the event that we've been able to, we have to end up placing the maximum number of shares, that will remove the uncertainty that we have, because the project will then be funded through equity and not through debt, and that would remove the uncertainty as to why we are sitting in suspension at that point in time. So after the completion of any one of those courses of action, Jerry, we would expect that we would be out of suspension, subject to ASX approval at that time. The next question is from George. It's, how does the board justify an 11-cent raise considering project progress and de-risking to date? Look, it's a great question, and I think it's one that we all as shareholders look at that and say, why do we need to go to 11 cents to do that? The simplest way that I can say is that if we need to clear the whole lot, we need to clear the whole lot, and this is price to clear. So, and because shareholders have been given the opportunity to participate in this, they can avoid dilution by participating. But it's around protecting the asset that we all have, but also making sure that if we do need to go and raise all the funds that are necessary, then it's priced to clear at that price, and make sure that actually happens, which should give shareholders some good confidence. Look, it is disappointing that we have to do it at this, but as we've noted, the theoretical ex-rights price is 17.3 cents. So there's a reasonable gap there between the 11 cents and the 17.3. So that is what's going to attract people into doing this if we have to place beyond the shareholder group. But as always, shareholders will have first crack at this, as is rightfully the case. There's a question here from Phil about how much is currently invoiced but not paid, and how much is still to be invoiced and completed on the project. I think during the presentation, and certainly it's in the announcement we put out before the prospectus, it states that we have about $8.1 million at that date of what has been spent by but uninvoiced to us, because our contractors have been willing to defer the invoicing of that, but we will need to pay them on that. And there's approximately just under $11 million still to be incurred. So that's what still needs to be invoiced. Put those together, it's just over $19 million, Phil. Another question, this one's from George. What's the debt position of our subsidiary, Lindy Jumbo, which is a Tanzanian entity? Have contractors issued invoices that are payable? Is the company solvent if the minimum is not raised? So the debt position of the subsidiary is that it does incur the debts, not Walkabout Resources. The contractors, in some instances, have issued invoices, but have deferred the payment of those invoices, so they're not due and payable currently. And that would be the context as to whether the company remains solvent or not. But clearly, at some point in the not too distant future, they are going to become due and payable. And the purpose of this raise is to provide both the commercial and also the moral completion of our obligations to our very generous contractors to enable those to be paid. Another question from Jerry. Why is the bank not accepting the apparent strong business case for this project? I'll let you answer that one, Andrew.
CIDB is a commercial bank. It's not a development bank like some of the other large ones. There has been a mandate from the government gone out to banks to say they must be more supportive of mining projects in the country, and therefore our discussions and our deal that we did with CIDB. They are obviously much less risk adverse than any of the development banks. This is their first, one of their first, or it's their first major mining investment in Tanzania, and it's just about their risk appetite. They need to obviously cover all their risks, and therefore the various levels of security going in, having security over the project, and then the extra levels of security that they are insisting on. So, look, I don't know the internal workings of the bank, but it's about their risk appetite and their risk profile that they need to take care of.
Yeah, that's probably an important point. Quite a few shareholders approached me and said, look, is it, they're not keen on the current, with rising global interest rates, the interest rate that we've had all those discussions with them. It doesn't relate to their commercial return on this. It does relate to their perception of risk in an area that they're, quite frankly, not very familiar with. I think that probably answers another question also from Matt, which was about what are the key concerns pushed back from banks regarding the funding. Yeah, you particularly answered there what it is from CIDB. I think broadly you could say other banks in Tanzania also do not have a similar history, that they don't have a history of lending into these sort of projects, and so they're unfamiliar with it. Outside of Tanzania, international banks, there really hasn't been a major influx of foreign lending into Tanzania yet since the changes that were made to their mining legislation a few years ago. Only got a couple of minutes left, so we'll just try and hit off a couple more of these. We still have quite a few, and don't worry, I will get to them in due course. Will the demand for small flakes in the future be more than the demand for large flakes? Is a question from Prasanna.
Yes, certainly. That's as I said, the shortage predicted in the graphite industry will be mainly driven by the EV and the energy storage. That said, is our belief is, and what we see is that a lot of the small flake is now being pulled out of other industries as well. So there will certainly be, it is mainly driven by the smaller flake. We've seen the biggest increase in prices is in the smaller flake, as I've said previously in the presentation, but also the larger flake is predicted to grow up to 6% per annum. But I hope that answers your question. Yes, the smaller flake industry, the prices are very robust at the moment. And as I've also said, 100 new mines need to open up in the next 10 years to supply the graphite industry going forward. That's what all the predictions are.
But we've only there's one more which I think is on a similar vein of one we just had. Given construction is going well and the civil works are near complete and the fixed price contract is for the remaining works, and this is coming from Anthony, what are the CIDB reservations about allowing drawdown to commence? It seems like the big construction risks such as latent conditions, supply constraints are all behind us. Very good summary there, Anthony. That's exactly our view on that and what we've constantly been pointing out to CIDB. Yeah, another way of just looking at this when we've talked about the collateral we would post, if they're concerned about the construction risk remaining, if we've got 11 million to incur, how much of that needs to be posted as collateral? 50% when you've got fixed price and fixed rate contracts? 100%? It's certainly less than the 20. So, we think we've got still a very compelling and strong logical commercial case as to why this needs to be completed. The banks heard all those arguments. They're taking it on board. We are frustrated that they have been quite slow in responding to us around this. But they got the money and we don't. So we really do have to work through their particular processes. Look, we're really out of time now, so there are quite a number of other questions I'll look to try and get back to everybody about. If I could just summarise, again, thank you very much all for your support, for what you've provided the company over the years. It is difficult that we have to ask for more support in the current juncture, but we are the owners of this company, and ultimately part of holding equity risk is that if other parties are not willing to step up to the plate, that's when the equity owners, the owners of the company, are being asked to do that. And so what we do from here on in is really in the hands of shareholders, and certainly the board strongly recommends you to take up your rights, both from a personal investment point of view, that you're able to protect your investment and avoid dilution, but more importantly, the collective effort that we make certainly puts us in a strong condition. As I said, whether or not we get debt across the line before we hit this deadline, the company will continue to pursue debt options. This is an absolutely outstanding project, and for the most efficient capital structure, it should have debt in there, and we would make the necessary adjustments to capital structure after that if that was the case. So once again, thanks everybody for your interest, attention. We're all contactable. If you want to keep track of day-to-day progress, follow me on Twitter and you'll see sort of daily photos there. Other than that, you can reach us through the company's website and so forth to be able to ask any questions that we haven't been able to answer today. Thank you very much, everyone.